Welcome to 7 Simple Ways to Improve Your Trading Psychology. Now, the reason I put a question mark after the number 7 is because depending upon how you use the information, you may find more than 7 or you may find a lot less than 7. So it's really up to you. I'm going to give you some very simple and probably very obvious ways that you can improve your trading, but it's up to you whether you want to put it into practice or not. So let's just get on with the show. Now, before I did this, I sent out a survey to my subscribers. Now, out of that survey, 6 people actually filled in the survey and replied to me. Now, here's a bit of information that I got from the survey. Out of these 6 people, 2 are already trading profitably. One of those profitable traders has a trading routine and they keep detailed records, so it makes it very easy for them to improve. The second profitable trader has no trading routine and they don't keep records, but one of their biggest challenges is the actual keeping of records, because they know that how important it is for them to improve by doing that. Out of those 6 traders, 4 of the traders have been trading for over 3 years. And out of those 6 traders, 3 of the traders knew what their trading strengths was. The biggest challenges they had, and this actually goes for the profitable traders, interestingly, is that they had a lack of confidence in their analysis. One of the unprofitable traders had a lack of confidence in the system, which caused them to system hop and just only stick to systems for a few weeks. Out of the 6 traders, 4 traders were over emotional when winning or losing. And here are some of the biggest challenges that they had. Out of the 6 traders, 1 trader put entering impulsively as their biggest challenge. 2 of the traders that I mentioned before put trading with confidence as their biggest challenge. 2 traders put fear of entering a trade as their biggest challenge. Note keeping was 1 trader. Trading around work was 1 trader. Taking profits early was 1 trader. And fear of losing money was 1 trader. So what does that mean? That means that I now have a sample size of traders. That sample size gives me really important information if I'm deciding what my next product or book will be. For example, I know that if I do a book called Overcoming Fear in Trading, that book is likely to appeal to the greatest number of traders, because that was the problem that but 30% of the people who replied had. Or if I do a one-on-one session to increase confidence in trading, or a book about it, say for example called Confident Trading, I know that is a problem that actual profitable traders had. Now the thing is, if I hadn't done that survey, I wouldn't have known that. I would have known about overcoming fear in trading, but I wouldn't really have identified that being confident in your trading analysis is a problem amongst traders who are already profitable. Now, by having that information, I'm now able to actually slant my next actions towards that. So even with only a small sample size of 6, that has given me some very, very valuable information. It has enabled me to actually help my students better, for one thing. So just going on with samples. When you have a sample size, you will be able to see patterns. And when you see patterns, you can make changes. And the way you make changes is that you can create new habits by altering your trading routines to accommodate those changes. So that's why it's so important to have a trading routine, because you need to have something to actually make changes to. When you create those new trading habits, your trading improves, and when your trading improves, then your results will improve. So this is why it's very important to have a sample size. Now what I want to do now is just go through one by one those people who replied with their surveys, and keeping it confidential, just give them a more detailed response. So hopefully this will help the other people who are watching this. So AF, you've told me that swing trading is the easiest type of system for you. So stick to swing trading. Just don't entertain anything else, and that immediately gives you a lot more clarity. You also told me that you never stick to a system past a few weeks because you have no faith in that system or in the system creator. You need to have faith in a system in order to endure the losing streaks. So in order to have faith, you need to really backtest that system thoroughly. I can't do that work for you. I can't, even if I said to you, right, this is the results of the system, this is the back-tested results, my back-tested results of the system. Why should you believe me? Unless you actually do it yourself, you can't have confidence in your system. The other thing is, you don't keep any detailed records because you don't want to know what happens when you trade badly. But when you don't keep detailed records, you can't improve. And so, it just goes on back to this thing about doing the work. You have to do the work. You have to back test to have confidence in the system. You have to have detailed records to improve your trading. Because you're system hopping after a few losses, you can never get anywhere like that. It's like climbing a hill, 10% of the way up a hill and then just walking back down again. Climbing up a hill, 10%, walking back down again. You can never get to the top of the hill like that. But you do know your strengths, and you know that your strengths are recognizing SR levels and price action patterns. So you do know that swing trading using price action, SR levels and patterns is your best trading system. So what that means is a system like the 10 times ROI and the TAYJ is the ideal type of system for you. So the only thing I would say to you, AF, is now you have to do the work. You have to do your back testing. You have to keep detailed records. You can't improve unless you do. BG, you are already a profitable trader and you have an excellent foundation. You do keep detailed notes, you do have a trading routine, and you do stick to a system. You don't system hop, and you are profitable with the current system that you have, but you want to switch to another system that allows you more free time. You have moderate emotions whether you're winning or losing, and your goals are state goals, which is to execute with confidence, which are very easy goals to achieve. Because they're not results goals. These goals are goals that you have full control over, and you can achieve those goals very, very quickly. Your problem is that because you lack confidence, you fear pulling the trigger. So you have two emotional issues. These are very easy problems to fix. You could use your EFT exercises for your current system. We could do a private session together. Or you could actually just use my book, Control Your Inner Trader, and take the exercises out of that, and you could deal with lack of confidence, and you can deal with fear of pulling the trigger. The goal that I would suggest for 2014 is to apply this excellent foundation you have to test and master the 10 times ROI and or the TAYJ system so that you can have minimal screen time. I think that because you already have a very good foundation in place, it will be a very easy transition for you and you should be profitable relatively quickly. But again, to have confidence and to overcome fear of pulling the trigger, you may need some EFT to actually deal with those two issues, because they're not actually related to your trading, because your foundation and your trading is good. CK, you want to have a system that works around your job. So the TAYJ or an end of day system is best for you. If you don't have an end of day system, I can recommend an end of day system for you that is a simple system based on my own my own principles of price action and simplicity. So if I will probably email you with a trading system that I would recommend. When you have that system, you must stick to it. You haven't been trading very long, but I would say to you that one of the biggest problems traders have is system hopping. If you don't stick to a system, you can't be profitable in trading. It's as simple as that, because you'll never do the necessary work to actually make those little changes that will ensure that a system is profitable. Also, you become very emotional when winning or losing. It's important that when you do trading, or when you take trades, you see your trades as part of a sample size. So if you start to see your trades that you are going to do 10 trades for the system just to get a sample size so that you can improve your next 10 trades, then that will give you you won't see a trade in a vacuum. You will see it as part of a larger context, and that's very important when you're being, when you're actually trying to stay emotionally cool, whether you're winning or losing. But I think that actually comes with time and experience, because traders who've been trading over 3 years tend to understand emotionally that that this trade isn't win or die, that the next trade could be profitable. So but having in mind that the idea of a sample size, I think, will help you. Also, if you back test the system to get an idea of the size of losing streaks that you can expect. So let's say you backtest the TAYJ system on a pair that fits around your time. So maybe, if it's end of day, it doesn't matter. But if you backtest the systems and you find that the biggest size losing streak is 4 trades in a row, for example, then as soon as you start losing, you then emotionally expect that this could be the beginning of a losing streak, and that you'll probably get about four losing trades in a row. You probably won't. You'll probably get 1 or 2. But if you're emotionally prepared for 4 or even 5, and if your system is still a winning system with that size losing streak, then hopefully you should be able to keep your losing streaks in perspective. The other problem that you have is you have a financial goal, which is 5 to 10% a month, and that's not a realistic goal. Not because of the size, not because it's impossible to make 5 or 10%. It's just because you're assuming that you're going to have a consistent return every month, and when you're trading, particularly the longer term time frames, that's not going to happen. Because if you think about it, 1 month you might get 4 trades, the next month you might get 1 trade. How can you have a consistent return when the type of trades that you're getting are going to vary every month, and whether you get a winning month, so you might have 4 trades in a row that are winners, and then the next month you may have a losing streak. So it's a very unrealistic idea to have 5 to 10% a month. So you need to change your goals to reflect the reality of the system that you will be trading. I would suggest that for 2014 that you have process goals and not results goals. What I mean by that is, let's say your one goal for 2014 is to find a system that suits you, that works around your job. A next goal that you could have is to make sure that you've back tested that system thoroughly, and then when you know that system is profitable, you know what the size losing streaks you can expect, you should then trade it consistently as consistently as you can within your power, and take every trade, which is easy when you have an end of day trading system, and keep detailed records. So those are process goals. They are goals that you can just fit into your lifestyle. They've got nothing to do with results. You don't know what your results are going to be. You have no control over what your results are going to be. You only have control over your actions, and therefore they are more realistic type goals. If you want to have income goals, I wouldn't put income or percentage type goals until you've actually started trading a particular system profitably, because it's only then that it's actually realistic to start looking at what type of income that you have. And even further than that, I probably would still keep process goals and just focus on becoming a better trader, and that as a result of that you will make more money. You can put both goals together, but again, it depends on whether those goals actually work for you. You may find that having a financial goal actually works against you and puts you under more pressure. And if you find that you're more pressured because of the type of income expectations that you have, then it's best to get rid of those goals and find goals that are actually going to make you feel calm and peaceful and be able to trade your system properly, than have goals that are actually going to be toxic and work against you. AJ. Now, AJ, you've told me that your best trading system is a swing trading system using support, resistance, and channels. You are already profitable with a system, but you know that you could improve by keeping detailed records. So you must find a way that can work around your trading of keeping detailed records. If you're not happy to write things down, then why don't you try using video screen recording software? And you can just what you can do is you can do the pre-trade analysis, pause the video, and then when you're taking the trade, carry on with the video, wear a microphone and actually talk yourself through what you're doing as you're doing it. Pause the video. As you're managing the trade, you can restart the video, talk about what you're doing while you're managing the trade, and when you exit the trade you can do the same thing, and then you finish the video, and then you have a video file, and then once you have 10 of those videos, you have your sample size, and then you can watch the videos through and just make notes watching the video, but then you will start to see patterns. You might want to have a smaller sample size when you're doing that. Then you might want to have 5 trades or something, but you have to find a way that you can stick to of keeping detailed records. You said that your biggest challenge is letting things slip through boredom. Unfortunately, the truth of the matter is good trading is boring, and because it's not about being exciting. If you're trading well, then the important thing is to look at your trading system as a profit center. And in order to change your life the way that you've told me you want to change your life, then I would suggest you don't depend on trading for a living anyway. I suggest what you want to do is focus on having multiple streams of income, because the more streams of income you have, the more financial security you have. And when you have lots of different streams of income coming in from all the different things that you do, then you are going to be in a better position to have to have the type of lifestyle that you want. So what I would suggest is that first of all you need to accept that the up and down nature of trading, because it is up and down, and add other streams of income to balance out your income flows, and just make sure that you keep up the good work, keep detailed notes, and balance your trading with other activities so that you don't just let your trading slip because it's not interesting enough for you. EB. Now, you really have a problem. You don't keep records, you don't have a trading routine, you're emotional when you're winning or losing, you don't know your numbers, you don't stick to a system, okay, and you've been trading now for quite a while. And the only thing I can say to you is that it's now time to, if you want to be profitable in trading, you have to change. You have to change. So the first thing is you need to find out what is your best type of trading. Is it swing trading? Is it end of day trading? Is it day trading? Whatever it is, what is the type of trading that you are most successful at? If you don't know which type of trading you're most successful at, then what you need to do is just pick one at random that fits around your lifestyle. I would suggest, let's say, the 10 times ROI or the TAYJ, whichever is best for you, and then just stick to that and have a sample size of trades. Keep detailed notes of all those trades, okay, and then you can always try the other system, the day trading system. And possibly actually do those alongside each other, just with the viewpoint, because you want to see which is your best type of trading. Is it if you've got the time for this, obviously, is it the day type trading, where you're actually going to be go in during the day, exit probably at the end of the day, maximum the following day, that you're able to be in front of the screen, you have the patience for the 5-minute charts? Is that your best type of trading? Or is your best type of trading the more swing type trading? Once you know that, then you can actually focus on a system, because you can filter out all the things that are keeping you from actually committing yourself. You have to keep records in order to know that information. You have to now start putting in place keeping records with every trade you take, even if it's only on demo, just keep records. You also have to start having a trading routine, and if you start doing that, you will start to get a structure for your trading. And you can't have unless you have a structure for your trading, you can't be successful. It's as simple as that. You have to have some kind of structure. You're very emotional when winning or losing. Now, this just reflects the fact that you're not that you're not actually trading with a routine, that you're not keeping records, that you don't know why you're winning or losing. You don't see it in perspective because you don't know your numbers. And again, the reason you're not sticking to a system is because you have no criteria for a system. So you say that your problem is taking profit too early, but actually your problem is actually greater than that. It's actually having a system that you're going to stick to, that you understand what the statistics are on the system, and then if after you've done all that you're still taking profit too early, then that is a separate problem that you can work on, but it's not actually your biggest problem at the moment. Your biggest problem is to find a trading system that you can stick to, keep your records, have a trading routine, have a sample size, get the information, and then if your problem is then taking profit too early, that's something that can be easily done. And again, it's impossible for you to be profitable unless you're willing to do that work. So that's what I've got to say to you, EB. F out. Now, it sounds a bit rude, that, doesn't it? F out, but you know who you are, F out. Because your biggest challenge is actually trading around your job, it may be that day trading is best for you. So the high ROI scalping system may be the best type of trading system for you, so that you can trade it on your days off work, and you don't have to think about trading then when you're actually working. If that is the case, then you need to commit yourself to and become expert on that system. And you need to create a trading routine. You already said that you have a trading routine, but you need to create a trading routine around that system. You need to keep detailed records, and you need to start getting a trading sample size. Let's say of 10 trades. The good thing about that is it's easy for you to get a trading sample size because there's so many opportunities on the high ROI scalping system. So you can get a sample size very quickly. Once you've got your sample size, then you need to analyze your results and practice Kaizen. So you need to just improve. Now, the thing with high ROI scalping is that you'll probably find that there's probably 2 or 3 pairs that will perform best. It's perfectly okay to just have 2 or 3 pairs that you look at, that you do hourly checks on, that you might even want to do that just within a period of time. So for example, you might want to just trade that system, London and New York, and not take Asian trades. That's fine as well. Do your back testing. If you're going to do back testing, do it based on that system. But for you, it's not so important to do back testing because it's easy for you to forward test, because you can, within a few weeks, you can get your sample size. So don't worry so much about back testing that system. But if you are going to back test from the point of view that it will help you fine tune your entries and recognize possibly failing channels, because that's another thing that you need to do. So that's the thing I would say. Just take that system, commit to it, and create your routine, keep your records, have your sample size, practice Kaizen, and just keep going. Don't switch systems. So just a little bit about back testing. Now, one of the reasons that people don't have confidence in the system is because they haven't really done the work. They haven't back tested the system. If you haven't back tested it, then how are you going to have confidence? As soon as you have a series of losses, or 1 or 2 losses, that will be it, your system hop. And so you have to back test. Now, the thing about back testing is that these systems work differently in different conditions. So, for example, if you have my video course, you'll know that the 10 times ROI system works best in a certain monthly condition, which is high momentum. So when you backtest, my suggestion is that you backtest in different situations. So if you backtest in a situation where there is high monthly momentum, then you need to differentiate the results of that from when you backtest in a situation when there isn't high monthly momentum. Now, I know that people do trade the 10 times ROI system and successfully when there isn't high monthly momentum, but you need to know the difference. So it is work, and therefore I would suggest just take one or two pairs. Don't trade every pair. Take one or two pairs, backtest those pairs, know it inside out, and then very gradually add another pair to the system. But what most people do is they will take all the pairs, they won't backtest them properly, and they will just add them all, and that's it. But I can tell you from my own backtesting, for example, that when I backtested the euro dollar against the euro yen, the Aussie yen, the pound dollar, and so on, the three best pairs that I had were the euro dollar followed by the euro yen and the Aussie yen, and the worst pair was the pound dollar, which actually for all of the trades when I backtested it actually ended up break even. There was no profit in the system at all, and yet you would think that the pound dollar would be very similar to the euro dollar, which was actually the best pair. But if you don't know that, then you will trade the pound dollar with as much emphasis as you would trade the euro dollar. So it's pointless doing the system unless you actually have backtested the system. Also, I would suggest look for losses first, because if we're trying to prove the system works, then we're much more likely to look for winners, because we want the system to work. I would suggest that you look for losses first. Go back in time and mentally look for when there would have been a trade, and ignore when there would have been a winner. Just look for losses, focus on that. Write down the losses first, and then look for winners second. Okay, and then you're much more likely to have a I don't know what the word is, to have a valid backtesting result. If backtesting is an emotional issue for you, then I would use EFT or one-on-one session that we could do to allow you to be able to actually put the work in and backtest, because it's really important. If you don't backtest, then how are you going to know the system works? You're just gambling at that point. So what this can actually lead to is failure to commit and system hopping. Now, there's a big problem that traders have with switching to different systems when they have a series of losses. And the thing is that you have to know where you are in the system cycle. So if when you backtest a system that you have the longest series of losses is, let's say, 5 losses in a row, and when you actually start trading that system, you're now, the first 2 trades you have are losses, then you know that you may just be in the cycle of the system where it has a series of 5 losses. And so the big question that you need to ask yourself, if you have a problem with a series of losses, is how can I profit from a system while taking a series of losses? And the idea of the 10 times ROI system is precisely that you can have a series of losses and still profit. And that so that is the idea. And if you backtest the 10 times ROI system, you know what the biggest series of losses you're likely to expect are, then hopefully you should feel differently when you start losing. If you don't, then you need more emotional work. You need to have a different perspective. And as I said, this idea of having a sample size is a good perspective to have. You have to stop system hopping. I think the reason that one of the reasons that traders system hop is that they don't have a proper criteria. So if you have a job, for example, that's a full-time job, then don't buy day trading systems. It's ridiculous. If you have, I'm not trying to be offensive, but it doesn't make sense, does it? If you have a job that is very part-time, and you have time, for example, in the afternoon, and that is your available time for trading, then only look for systems that are where you can trade in the afternoon. If you're if you have a 9 to 5 job and you're able to trade around your job and you're able to check the charts 3 times a day, then fine, the TAYJ system is probably a good system for you. So you have to choose your system based on the limitations that you have. It's better to underestimate the time that you have rather than overestimate your time. When you do choose a system, you need to choose a system that fits in with the market money and that suits your time and trading style and stick to it. What do I mean with the market money? Okay, the market money is what are the when if you have my video course, you'll see that I do a video about the red car bias, and what that is it's about the type of that every system basically is a bias. Every system is a filter that you pop into your brain, that you wear that filter when you're looking at the charts. And the problem that a lot of traders have is they don't know the difference between the fact that they're just adopting a filter and what is the truth. There is no truth in trading. There are only filters that you adopt. And so if you just look at it logically, if you're going to choose a filter or a trading system, then you want to choose a filter that the people who actually move the markets, you want to choose the same sort of filter that they're wearing. Because if you have a filter that the big money doesn't recognize, then it's not going to be very likely that that's going to be a valid filter. So what I mean is that there's lots of trading systems that are hyped as the secret system. Well, if it's a secret system, then the big traders aren't going to be trading it, are they? No other traders are going to be trading it. So if it's secret, then it's not going to move the market. So that's pointless. So just moving on for a little bit, there is a book written by called FX Insider. It's written by a market maker called Bradley Gilbert, and in his book he actually shows you the type of charts that they use. Now, does this chart remind you of anything? This is a trend line, and he looks at the most obvious trend lines that all the traders will see. That's the type of trading that they do. This is actually how you trade a break after a trend line break. And you can see how simple those charts are. Now, his other charts are just as simple. And one of the things he talks about in his book very much is trading trend lines and trading channels. And that's what they look for. So, if that's what the market makers are looking at, big levels, big round numbers, very, very obvious patterns, very obvious trend lines. He's a big fan of trend lines and channels. Then why go for any other type of system? And the great thing about the 10 times ROI system is that it's all based around that. It's all based around trend lines, channels, breaks, pullbacks, the things that the market makers look at. So if you look at all the best systems are based on price action. Anything that's not based on price action is not what the big market makers are looking at. If the big market makers aren't looking at it, then it's not going to. Then how do you know that trading methodology is going to be in line with what the big money is looking at? And so, why don't you just choose a system? When I say you, I don't mean you. I mean a trader, any trader looking at this. Why don't you just, choose a system that is in line with what the market makers are thinking and how they're trading, and then just stick to that? Because what other type of system is worthwhile? No other type of system is actually worthwhile, is it? The problem is that if you keep hopping from system to system looking for the perfect system, then every time you spend 3 to 6 months on a system and move on, then you've wasted those 3 to 6 months and you can never get any traction on a system. And that's the problem with system hopping, that you can't get traction. You can't actually do the necessary work to make that system profitable over the long term. And I mean, some traders go years and years. It doesn't actually stop. I know that myself because I've wasted years and years doing it. And, I came full circle and I realized that actually I was just wasting time. and never getting anywhere because I was looking for an answer that didn't exist. The answer was inside me, which was to actually do the work, have a system that worked, do the work, make it profitable. There's no getting around it. If you keep system hopping, you can never make money in the markets. You have to be able to commit. The other thing is this dream of trading to escape a job. Now, this actually came to me, back to me in some of surveys, and the dream is to live off the trading and then leave the job and everything's going to be hunky-dory. But I want you to think about that for a moment, because living off your trading account is a very, very stressful way to live, in my opinion. Okay, just imagine that you have a bad month, all right, and you have a bad month and you're actually living off your trading. How are you going to feel, and how is that going to affect your trading results? It's going to be very, very difficult. In my opinion, the way to look at it is, if you want to escape your job, is to set up multiple streams of income. Now, I do this. I mean, I have other businesses besides trading. I'm now doing some trading books, video course. I do a lot of other things, and trading is just one stream of my income. And if I don't trade for a few months, it doesn't make that much difference to me, because I have other ways to make money. So I'm relaxed about it. And I think if I was trying to just live off trading, I wouldn't be relaxed. I'd be really stressed out. I'd be really focusing on my trading and trying to force trades. And I think that is the result of living off your trading if you try and do it too soon. So my suggestion is that if you want to live off your trading, then what you should do is build up a big amount that can keep you for a year or so. And then when you have that, then you can trade, but you don't actually have to live off your trading. You can build up your trading account so that you can remove, at the end of the year, you can remove an amount that can keep you for the year, or let's say for 6 months, but you don't have to month live off your trading account. And if you go for multiple streams of income, then going for a trading system that takes only a small amount of time then makes sense, because it allows you to actually explore other opportunities that will enable you to leave your job and have the type of lifestyle that you want. Why is it important to have a trading routine? Quite often, and I used to be guilty of this myself, because I wanted to be free, and for me trading was a way of actually escaping routine. The problem was that I would come to the charts when I was ready to trade, and I would look for a trade, and that sometimes I would see a trade and sometimes I wouldn't. Quite often when I saw a trade, I hadn't actually done the pre-trade analysis. I hadn't taken the time to do that, and then I would get into a trade only to realize that actually I shouldn't be taking that trade, because it didn't line up with the monthly or weekly levels or something like that. So the answer to that is to have a trading routine. You have a trading routine, you do your pre-trade analysis, you have everything in place, you have a trading plan, something that you're waiting for, an event that you're waiting for, maybe a price level, and text to some sort of chart, technical analysis, something to happen. You're waiting for that. Either it will happen or it won't happen. If it doesn't happen, then there's no trade. If it does happen, fine. Then you have your trading routine about how you enter the trades. You have to have some sort of routine, otherwise it's very difficult to backtest, because if let's say for example, you're taking trades one day you take trades in the afternoon, the next day you miss those trades, the next week you take trades in the evening. How can you backtest? How can you determine what is the most profitable time to enter trades? It's very difficult. When you look at a routine, what a routine does is it it solidifies your good habits and it prevents your bad habits. So, for example, if you have the habit of being an impulsive trader, then having a routine will prevent impulsive trading. So that's the idea of having a routine. It enables you to practice Kaizen, to know what's working and what's not working, and it also helps you to sort of put neural pathways in place where you have routines and habits that actually make it much easier for you to do the necessary preparation for a trade. One problem that I think traders have that are actually doing a job is that they mentally compare trading to a job. So most jobs, anytime you do that job, is a good time. For example, let's say you're writing a report. Any time of the day or night is writing a report is a good time to write a report. If you're going to bake a cake, any time of the day is good for baking a cake. But trading is much more like farming, when there's certain times when it's good to plant and there's other times when it's not good to plant. And if you plant when it's not a good time to plant, then you know all your plants are going to die. So it's very important to be aware of where you are in the trading cycle. And if it's not a good time to trade, then you don't trade. So you have to have that type of mindset rather than thinking of trading more like a job where you come in, you do your work, it doesn't matter when you do your work because any time's okay. Just like me trying to come to the screen and just trade because I'm ready to trade because any time is okay for a trade. Nothing could be further from the truth. Trading is much more waiting for an opportunity. And I think it was Jack Schwager was actually talking about Jim Rogers, and something that Jim Rogers, very, very famous big fundamental trader, says that when he trades, he waits until the trade is just lying in a corner waiting that he could just walk over and pick it up. You know, it's got to be that simple, and the money's in the waiting, it's not in the trading. So, you know, most of the battle in trading is actually waiting for the perfect time to take that trade. It's really timing, not trading. That's why it's very dangerous to compare trading to a normal type of job. If you don't know what to improve, then you can't improve. And if you don't keep detailed notes of some description, whether it's video, audio, written on your computer, in a book, however you keep those detailed notes, if you don't have a sample size and keep detailed notes, how can you prevent losses if you don't know what's causing those losses? And how can you win more if you don't know what's working? So, I mean, I know I keep going on about this, but it's you know, not keeping detailed notes is a killer. Now, I've already said this, but trading is not like a dollar per hour job. If you work harder by taking more trades, I know it's an obvious thing to say, but emotionally, I think a lot of traders feel like this, that if you work harder because you trade more, it doesn't make you a better trader. It might feel that it does, but it doesn't. The back testing and the mentally preparing for trades is actually the work. The work is not taking the trades. The work is actually preparing for the trades. And think in terms of what Olympic athletes do. You know, they train, they prepare, they practice, they are highly focused, they're very, very professional. And the idea is to put in the hard work by being ready for the trade when it comes. That's the hard work of trading. Also, knowing when it's good to trade, and not trading unless those conditions are present. So, for example, on the 10 times ROI system, one good way of knowing when it's good conditions to trade is when you have a daily trend line break and prices hugging the red moving average and not touching the green moving average on the daily chart. That's a good condition to look for trades and entries either on the hourly or the 4-hourly chart. So, you know, if you don't, going to the most simple form, not trading channels or anything, if you scan your daily charts and you don't see that set up, then you know it's not a good time to trade. It's simple as that. That if you just stack to that, then that could you could literally scan your trades at night. It would take you 5 or 10 minutes, and you don't even start looking for a trade unless you see that type of setup. And that's the difference between, sort of trading when it's good conditions and trading when it's not good conditions. You may see trades, successful trades set up when it's not good conditions, but the probability is not as much in your favor. So if you have the right conditions for trading, then trading can be very, very easy. But if you have the wrong conditions, for example, if price is very choppy, then trading this 10 times ROI system is going to be very, very hard. So half the battle is actually finding the right context and knowing when it's good to trade. If you've done your work and the problem you have is that you're afraid to enter trades, and that fear is skewing your trading results because you don't enter when you should, you don't take trades when you should, then this is my suggestion. Well, read Control Your Inner Trader, use EFT. If you don't really know how to use EFT and you want a private session, then you can email me. EFT can be done over the telephone, and I know from personal experience that EFT is brilliant for that, because I was afraid to enter trades and I used EFT and I just stopped it. In fact, what happened was I ended up having the opposite problem, where I just had no fear at all. I was just entering trades, when I shouldn't have done. So, the next thing, of course, is that you have to use you have to use some sort of caution, and you can also use EFT to help you actually take more time before you enter the trades. So the point I'm trying to make is that EFT is a very powerful tool, and if your problem is being afraid to enter trades, that's a very simple thing for EFT to sort out. When you're dealing with a string of losses, you have to have a mental paradigm that allows you to deal with that. So I keep going on about this, but one way of looking at it is to, when you backtest the system, what's the longest losing streak that you get? And then allow for that plus half. So if the longest losing streak you get is 4, allow for a losing streak of 6. Then work out, is your system still profitable if you have a losing streak of 6 trades in a row? And if that's the case, I find that the 10 times ROI system is great for that. If your system is still profitable, then hopefully that can logically, well, maybe not emotionally, but logically, that can just give you a logical foundation for being able to accept a string of losses. One of the most important things about trading is thinking in terms of process rather than results. So I'll just go into that a little bit more. A results type of thinking is, I will make consistent profits. And that's a very common thing amongst traders. Be a consistent trader, make consistent profits. And I think traders actually mix up the two things when actually nothing could be more different. Process thinking is, I will be a consistent trader. So what's the difference? The difference is that making consistent profits is something that's completely outside your control and is actually very unlikely in trading, because trading itself is not consistent. How can you, to make 50 pips a day, how do you know you're going to make 50 pips a day? You could make 50 pips one day, you could make 100 pips the next day, you could make 10 pips the next day you could lose 60 pips. That's not consistent, but that's much more like what trading is. Being a consistent trader is something that's completely in your power to do, and is when you're a consistent trader, it means you do your trading routine. You take detailed notes every day, every time you trade. You have you come to your charts at the end of day at a particular time, and you look for whether you've got a correct trading context. That is the difference between results thinking and process thinking. So that is the thing that a lot of traders get mixed up, this idea of consistency, and making consistent profits. Well, you may make profits if you're a profitable trader, but you're not going to make consistent profits, but you can be a consistent trader. Results thinking is, I can't handle a series of losses because it means my system isn't working. So that is like when you're very focused on results. When you're thinking in terms of process thinking, you're thinking in a different way, which is you're thinking much more in terms of building up your emotional capital so that you can handle the string of losses that your system is going to give you over time. So if you have process thinking, you're thinking much more like, I pride myself on being able to handle it when my system loses. I know it's just the numbers playing out. So you actually, you take pride in the fact that you have the mental fortitude to be able to withstand losses in your system. Results thinking, I want to leave my job and be supported by my trading. So it's very much focused on what the results of the trading are going to be. But when you have that type of trading, then that puts you under a tremendous amount of stress, based on the result of the next trade. And that's why I think if you have that type of results thinking, it can be very difficult to withstand series of losses or to even take a trade. And you may find ways to actually avoid taking a trade because the results of that particular trade, there's so much riding on it. Whereas if you have process thinking, it's much more like, I don't think about what the results are. I just focus on my trading performance. I don't concern myself with anything else. And if you actually move over from results thinking to process thinking, and if you can only focus on process thinking, then you're much more likely, in my opinion, to be a successful trader. I really recommend EFT for traders. It doesn't do everything, but it can help a lot. First of all, it can remove things like fear of failure. It can remove the fear of entering a trade. It can open your mind up to other opportunities. So, for example, during the trading, when you're actually analysing the charts for trades, you may find it actually difficult to really see the charts. Well, by doing tapping, it can actually release your mind to see things that maybe that you've missed. It can calm you down during trading. It can improve your thinking skills and actually create sort of paradigm shifts and change the way you think about trading. So I really recommend that if you haven't already read Control Your Inner Trader, if you haven't learned EFT, that you actually start learning EFT. It's a really useful tool. If you want to know the basic tapping points, if you go to the Inner Trader tips section on the blog, there's a video there giving you the basic tapping points to remember. So things to remember. First of all, find a system that works for you. Okay, you have to find a system that works for you. If you're day trading when you should be swing trading, it's not going to work however much you trade it. So in a sense, you need to scan systems very, very quickly. If you're at the beginning stages and you're not sure what system works best for you, you have to have a set of criteria, and then you have to, before you actually put all that time and effort and energy into making that system work, you have to do the back testing, work out if it fits around your lifestyle. If it fits around your lifestyle, do the back testing. Is it profitable? If it's profitable and you do that system and for some reason it doesn't work for you, then get rid of it very quickly. Okay, but that is only at the beginning of trading. Once you find that system that does work for you, that works around your lifestyle, that you feel comfortable with, that you've back tested and you've got faith in it, then why actually go to another system? There's no point. You stick to that system. Trade only a few pairs. It's much better to feel underwhelmed as if you could do a lot more than feel overwhelmed as if it's all a bit too much for you. Keep records of every trade, create a trading routine, stick to the routine, and improve. I can't say that enough. Okay, so I'm just going to go over this for the last time. Okay, how do you set up good habits in trading? So your first goal, if you haven't got 2014 goals in place, I would suggest a process goal. Pick one system that suits your time. Look for suitable monthly context if it's the 10 times ROI system. Pick your pairs, okay, that you're going to backtest. Pick one pair. Backtest that pair. Carry on until you find the best 2 or 3 pairs. Set up your profiles. Okay, so if you've got a let's say you've committed to the euro dollar, set up your euro dollar profile, set up your charts within that profile, commit yourself to checking the charts. You don't have to actually trade, but just committing yourself to checking the charts, and you now have a habit. So you've got a habit whereby that you've got a profile set up, you've got a habit for checking the charts, which could be the end of day. You've only got three pairs that you check, and you check that at the end of every day. Okay, so that's one habit formed. Okay, then you can start adding other habits, and that's another way to approach things if you're finding it very difficult to stick to a routine. Once you've got that habit in place, the next habit is that you can focus on finding entries and then walking away. So you've already got your habit in place of checking the charts. So your next habit could be on, okay, right, so now I'm just going to look for entries, and then I'm going to enter, let's say on a demo account, and then I'm going to put in my take profit, and I'm going to just walk away. Okay, so that could be your next goal, your next process goal, that you put in your stop loss and your profit target, and then you walk away from the charts. If you're going to backtest your entries, that can help you obviously spotting good entries, and if you're going to do that, I would suggest if you're going to forward test that, then I would suggest to use a demo, nano or micro account, and then you just practice you're taking your entries, putting a take profit in, walking away, and then when you check the charts, after you've done that, you check the charts at the end of the day. So now you've got another habit in place, okay? And that's a particularly good habit for people who tend to try and micromanage their trades or who exit too early. This idea of just focusing on putting in your entry, your stop loss and take profit, and walking away from the charts. So what is the result? The result is that you will get a new trading routine. When you get a trading routine that involves you taking your trades, setting your stop loss and take profit, walking away, and then you can add in another habit, which is when you check the charts in the evening, you can assess if the pullback, and I'm talking about the 10 times ROI system here, if the pullback is large enough for you to now move to break even. But this can actually be done by stacking your habits. And if you stack your habits, then within a very short period of time, you should have a trading routine that is a success routine for the 10 times ROI trading system. And obviously you adapt that for any other system that you happen to be trading. So my suggestion is focus on creating each new habit. Don't worry about the results, because what you're doing is you're creating a sample size, and do that over a period of 10 to 20 trades depending upon what time frame you're trading, and that's going to help you now to create a sample size so you can start practicing Kaizen. The only caveat that I would say is that when you backtest your system, if your system is profitable using random results, then it's okay if you trade randomly. But if your system is profitable because every trade is taken, then you need to take every trade. And so trading routines during that time period when you need to take every trade are going to help you take every trade. And most backtesting results actually rely on you taking every trade. So, that's something that you need to know. So when you have your 10 trades, you've got your detailed notes, you get your information. When you get your information, you can now take action and put into place new habits. This helps you stop losing money, and it also helps you make money, and it helps you also get the correct mindset, because you now know that your next trades are where you're going to be working on your next sample size, and so this can help deal with your negative emotions. So that's really it. I mean, it's as simple or as complicated as that. I hope that you've got some good ideas out of this lecture, and if you have, I'll be interested in hear any feedback. If you've got any questions, then put them in the comments box below this video, or send them to me by email and I will answer them. And in the meantime, good trading.